Going on YouTube? Wow, did Powell head fake the markets today? That was a sight to see, guys. So they released the memo before Powell actually spoke, raised rates 75 basis points. And on top of that, there's some verbiage in there about how the Fed's going to consider all the work that they've done and the success of the cumulative tightening, right? And so I'm watching CNBC and they have their talking head panel on there and they're all talking. They're like, oh, wow, this is very dovish. This is more dovish than we thought. And if you guys were watching the charts, the markets went crazy. Okay, let me just show you the Dow because the Dow was a big whipsaw mover today. And here's the daily chart. The Dow pumped all the way up. One candle here, guys. One candle was 33K all the way down to 32K. So you basically had 1,000-point whipsaw up and down in the Dow. And so then Powell came out and actually spoke, right? So Powell came out and actually spoke, and he said a couple of key things. One of the key things he said was, we actually will be needing to raise rates more so than we originally thought because inflation's been increasingly stubborn. And he said, don't anticipate a pause anytime soon. Basically, this was the most hawkish I've seen Powell ever since he started everything. So this was really interesting because everybody anticipated a Fed pivot, some Fed dovishness, some sign. And he specifically shot down 75 basis points not being on the table for December. So for the next rate hike. So he was asked that specifically, are you going to raise 50? And he wouldn't take it off the table. He said inflation, we want to see several months of it coming down. We're not seeing that. We're seeing it increasing. So this is extremely hawkish, Powell. The market totally misread it. The market front run the Fed. So now we got to go through the charts, guys, and we got to look at the charts and see where this is going to bring us, if the sell-off will continue or not. Some of these markets rallied. Some of these markets were kind of meh, but a couple of them rallied big, and we got to see if we're going to be on our way to making new lows or if we're going to get some type of rebound potentially and another move up. But guys, I hear a lot of the YouTubers that beat up on the Fed, and don't get me wrong, I don't like the Fed at all, right? I don't think it should exist, but it's such misplaced anger. And I see it on TV too, like on CNBC especially. They get these money managers, these portfolio managers. Oh, the Fed's going to put us in a recession. The Fed's going to do this. The Fed's going to do that. Why is the Fed doing what it's doing? The Fed is the enabler. The politicians you elect are the ones that put trillions upon trillions of debt into the marketplace, okay, into our country. So when you print what, $6.72 trillion, or was it $5.72 trillion? I don't remember what I said last video. But when you print $6 trillion in 30 months, what do you think is going to happen? Inflation. The Fed didn't print that on their own. They were asked to print that by the government. They were monetizing debt. This is why you have inflation. So everybody directs their anger at the Fed, but in reality, your anger should be directed at the moron politicians that are elected. And by the way, guys, November 8th is an election. I would highly suggest you get out the incompetent morons that locked you in your house, put your businesses in your neighborhood and your cities out of business, and kept your kids out of school. That's what I would do personally. But, everybody can make their own decisions, but I am hoping for a red tsunami. I don't want a red wave. I want a red tsunami back into Congress. So let's go ahead and look at this on the charts, guys, the DXY. DXY, like I said on the other video, I told you when Powell does 75 basis points, you're going back up. DXY is already at 112. The number to beat on the DXY, remember, inverse relationship with the markets. The higher, the stronger the dollar gets, the weaker the markets get. 618 is at 114. You want to beat that, then you're looking at 117. And of course, 1618 is at 121, which is where we got to in Y2K before the market cratered. Doesn't have to trigger anything if it gets up to 121. It could go higher, it could go lower and still have the market crater. But, that is just, market pattern, bubble pattern. And we got to 121 in Y2K and the market cratered. So we'll see what happens. But guys, overall, the economy, the metrics in the economy are getting worse. And the Fed has to stay very hawkish because we have more job openings now than we did. We had the JOLTS numbers come out. Fed was really disappointed in that. The GDP came up. This is providing cover for the Fed, and we had these markets rally. These idiots rally the market. If you want the Fed to pivot or pause, probably shouldn't front run a potential Fed pivot or pause, because that just gives them an excuse to keep raising rates. The other key thing Powell did say in the press conference is he would rather make the mistake, I'm paraphrasing, he would rather make the mistake of over tightening because they have the tools to deal with that than not tighten enough and have to come back and fight inflation again. So that's the mindset of the Fed. And that, by the way, is the correct mindset. I just don't think they're going to get to the operative number they need to be at to actually bring down inflation substantially. I think we're going to finish this year, obviously above 7% inflation. I think most of next year you're going to have above 6%, maybe above 5% inflation. This is going to be around for a long time because it's sticky. And if you guys go grocery shopping or go out to eat or buy anything, then you will see that inflation as well. Not to mention when you have conflicts and things going on around the world, it's just going to be harder and harder to get rid of it. So let's see. We got the dollar. Let's look at the 10-year. 10-year went up. It's at what? 4.060. So it just needs to stay above 4%. Really, it puts pressure on the marketplace. You can see you had this nice parabolic rise. Can it pop up more? Sure, it could. I'm not a debt market guy. I just know when you have the yield go up, obviously it's a lot of pressure on the marketplace. But I don't spend too much time on the debt market stuff. It's just one of the factors I look at. Now, again, the elephant still in the room. I told you I predicted a hawkish Fed, but okay, so let's look at the Dante's Descent, guys. 11 bars down, 20 bars or 9 bars up, 20 bars between swing highs. And again, none of these swing highs were ever defeated, right? So this is the 25-210. So I saw a lot of YouTubers saying, oh, pump to 30K, going to go to the daily 200, all that stuff. Well, that would invalidate the pattern. And as a pattern trader, I cannot allow that to happen, my friend. So that's not going to happen. You're not getting above 25-214. Now, Bitcoin is holding up really well, but we're on our target candle right here in red. Monday 31st is our weekly candle. Now, something to notice, I mentioned this last time, people are like, you're never going to get anywhere near this target. Well, let's see what happens this week, guys, because if the market starts selling off hard, Bitcoin can easily come down. And just in trend, you have multiple 10,000 point candles like this candle right here, this candle right here, which was on a changeover candle, just like this candle is. So you have a couple 10,000 point candles. 10,000 points right now would drop us down to 10K. I'm not predicting that, by the way. This pattern doesn't predict 10K. That's a fib, guys. That's a fib target. What I'm looking at is a bottoming pattern potentially. So if we do see some sell-off, maybe that goes down to 17K, 15K, but you need the markets to sell off, okay? If we do see some sell-off, we'll see if this pattern holds and we get our nice little wave up. That's what we're looking for, is a bottoming pattern and then a wave up. But as of right now, people keep telling me, are you going to invalidate that pattern or say it's not holding up? Well, I mean, the pattern's still active and there's nothing invalid about it. Never had a swing high broken. 9 bars up, 9 bars up, 11 bars down, 11 bars down. Here's your 11 bars. You're on the 11th bar. Are we going to get a bottom to trade off of here? Maybe the bottom is 20K and it goes up from here in a wave. Let's see what happens. Or you just keep going down and this pattern becomes invalidated because Bitcoin starts rolling down because the markets start rolling down and maybe they don't wave up for a little bit. Now, seasonality, there's always, not always, but people really want to believe in a Santa Claus rally. They just keep talking about it on TV, but seasonality trends, things like that, everybody wants to believe it until it doesn't happen, okay? And could it not happen? It could easily not happen. It depends how the market reacts once it starts digesting this news. Now, I think the smart money is going to be dumping equities because you just heard from the Fed, higher for longer, and we're going to a higher interest rate, which you wouldn't specify, higher interest rate than they originally thought, and they're going to hold that price up higher for longer. Okay, again, super hawkish, and he said he's not afraid of over tightening. Super hawkish. Okay, so I think equities could definitely sell off. Let's see what happens tomorrow. What is tomorrow? Thursday. Let's see what happens Thursday and Friday in the equities markets if they start moving. And let's see if Bitcoin starts moving. And if this doesn't move, then what we need for this pattern to work would be the next weekly candle, which I believe would be what? Sunday, November 6th? Yeah, November 7th. That's the next candle. Monday, November 7th. So that November 7th candle on Monday should be the next wave up if this pattern holds true. Okay, so if that candle on November 7th goes down, then the pattern invalidated. Okay, so that's what we're looking at, but everything else is intact right now. I want to see if we get some sell off, if we get some movement in the price of Bitcoin. And let's look at Bitcoin on the daily. Bearish divergence on our MFI, money flow index. And you can see that here if you're higher high in price, lower high in the MFI. This is a volume weighted RSI. If you guys want to come check out our Discord, join button right underneath the YouTube video. We have almost 13,000 people now on our Discord, guys. Love for you guys to check it out. We have a great staff there for support. We have awesome members. The best thing about being in the Discord, honestly, and I had to be talked into doing it back when we first started it. It wasn't something I wanted to do. I just wanted to trade, met some people. We're going to have a little Discord. We had 30 people like in May of last year. Now we have 13,000 people. It's been a lot of fun, guys. But the best thing is just meeting other people and everybody pursuing financial freedom. Guys, if you want to trade on our platforms, help support this channel, I would really appreciate it. This is what brings you the content. Check out BitGet in the video description for all of the cryptos, and check out SimpleFX to trade these stocks, trade these commodities, and trade the individual stocks. They also have some cryptos there as well, but both of them are fantastic platforms. You can get all the information in the video description with our bonuses and the tutorial for SimpleFX for those of you that have not used CFD exchanges before is also there as well. Now, looking at Bitcoin here on the daily time frame, let's go ahead and look at this. Let's go ahead and zoom this in a little bit. And looking at Bitcoin here, you can already see the double top forming on the daily, right? But we're going to zoom in. We got some volume momentum. This is a VROC. This is another indicator you get as a gift when you join our room. We have several custom designed indicators from Fractal Trade 15 for our room, guys, and we give these to our members for free. And let's go ahead and zoom in and see this. You can see the double top much easier here. Now, just like I said in the last video, Powell comes out hawkish. What did I say it was going to do? It's going to do this. Powell comes out dovish. It's going to do this. And right now, not a big drop yet. You're at 20,165, but it did turn down, obviously, because the market's turned down, and you were roughly at 20,800. So you had a 700 point drop here for the Powell presser, okay? Look at your money flow. Definitely dropped off on your money flow to the oversold area, losing volume momentum here as well. So you got to watch this double top. You're basically at your neckline here. Let's go ahead and just throw a trend line down so you can see this a horizontal ray. Just throw it right about there. Right around 20,000, what is that? Or right around 20,000, 1995. Right around 20,000, you want to watch that, because if that breaks, you're coming back down into this tranche, okay? And I can actually go ahead and give you a better fib projection here for where this would actually go to, trend-based fib. Let's do this top, that swing low, swing high. 19,414 would be your next target here if this double top does break, which right again puts you back down in this tranche, okay? So we'll see if Bitcoin ends up breaking down to that level. Here's a 4-hour time frame. You can see it here. There's your 5 and 21 EMA, your bearish cross. Let's turn those off, and then let's do that here as well. Swing high, swing low, swing high. 19,414. So you're already down to about the one fib right here, which is roughly around 20,000. We'll see if you keep breaking down. But again, this is all going to be pulled down by the equity market. Let's get some numbers on the equity. So what we have here on the Russell, 3%, minus 3% move, okay? $60 move in the Russell. Look at this candle. Didn't quite get to the 200, right, on the daily time frame, but these are the big trades, guys. Didn't quite get to 200. 3% down move, $60 down move. Here's your 50. You lose the 50. So what we're looking for here potentially, guys, is if we do get some type of rebound, come back up for your double top, right? Just like this. Come back up for a double top. See if you can come up for a double top, like maybe get rejected at 1831, and then break down again and revisit these lows. That's what you're looking to do here, okay? But you lose the 50. That's the next key area there to hold on to, which is about 1777, almost 1776. Important year in this country. If any of you guys know what the year that is, that makes it important. And looking at the 8-hour time frame, my chameleon pattern here at the 1618, 1852. This worked out really well. Got above it, obviously, to 1871, but this worked out really well. And so that's cool. And you can see this, and we'll see if we find support here and bounce back up on a rebound. We'll look to reshort it if it does bounce back up. And let's go over and see what the Dow did. Dow is down 466 points, a 1.43% down move. Okay, volume momentum is down. MFI is down as well. But the key thing here on the Dow is the Dow had the best October since 1976. Okay, so you can see the Dow was above the 200, the only index to get above the 200, and now it's below the 200. I think the Dow's going to come back down, obviously. And we'll see if it rebounds back up for a double top, but it may do this exact same move, something like this. See how it got above the 200, came down, found support, came back up, and then nosedived, right? So you got above the 200, came down, maybe we get this little hook back up again, and then nosedive. So let's see if it repeats that same exact pattern, but let's see if we can see where this would go. Try a big wave projection here, something like this. That gives you the 382 right at your 50, okay? That makes sense because but this is further down, obviously. That's at 30,888. 30,888, so that'd be a nice drop for the Dow to come back down. Your 618 has you right back down, revisiting your lows at 29,542. So obviously other ways you can do this as well with a fib retracement if any of you are trading the Dow. You can do a fib retracement and see what you get doing this. And at this rate, the 50 is at your 0.5 moving average at 30,820. 382 is at 31,350. 618 is at 30,290. Okay, so Dow looks weak. I want to see if we bounce back up, maybe back test that 200. It'll be another opportunity to go ahead and reshort that as well. And let's go ahead and fast forward to the S&P. S&P. Now, remember, I was saying 38,333, right? So we got to visit 38,333. Don't see us getting past the 618, whereas Wall Street had us going to 4,100 was the average, right? And that's obviously because the technicians are looking at the 200 because as you can see here was 44,099, right? So this is where they had us going, and I guess I won. I was closer than they were for now. Now, having said that, it's too early to claim victory, right? You can come back up, make a double top. You can come back up, find your support, and break back out. But we'll see how the market wants to handle and digest what Powell said. And remember, almost half of the indices are bought and sold by algorithms, right? So if you're bought and sold by an algorithm, you just got triggered falling back below the 50. You may see increased selling because we fell back below the 50 on the S&P, symbolic of the broader market. The Dow's only 30 companies, the S&P is 500 companies. Obviously, the Russell is 2,000 companies. So we'll see how this plays out. But where you're at now is you're bouncing off the 382 at 37.52, and of course your low. Look at your low. Again, this is why I love fib trading. Look at the low right here. Right here, guys, where my cursor is. Let me go ahead and hover back over that. The fib is 37.52. What's your low? 37.52 spot 4, and the 382 is 37.52 spot 3. You're within 0.1. How accurate is that for support? I mean, isn't that incredible? I think it's incredible. So we'll see if this holds up. You've revisited this before. You're back at the top range of your Wyckoff, or if you start falling through it, right? So you're either going to rebound up, try to retest this 50. If you get above that, watch this 618 again. Opportune time to potentially make a double top. And again, guys, trade this stuff on Simple FX. It is such an awesome platform to use, and you get up to a $5,000 instant bonus, and that goes straight to your margin, guys. You can trade with it immediately. You don't have to roll it over. There's no games. There's no tricks or gimmicks. No hidden fees. Fantastic exchange. And let's go ahead and look at the NASDAQ. NASDAQ. Now, the NASDAQ is really nasty, okay? Again, low volume, okay? Look at the volume momentum. No volume momentum for this rally at all. It's just been dying off. And if you look at this, your 200, 233 was way up here. The NASDAQ wasn't even close, except for this one candle here, to getting to its 50. And the reason I don't have a fib on here is because I want to show you this, right? Here's the last time I shorted it up here, okay? So right here, what do you got, guys? Once again, a double top, and you're right at the neckline. Okay, that's a big double top here. Let's see if we can look at that on the 8-hour time frame. Let's go ahead and get some fib targets here on the 8-hour time frame and do this. That's probably the high right there. and your 1618 would bring you down to 10,274. Now, what's key about this, see this 1-1 line? This is a 45-degree angle going back to the pandemic low. So in geometric trading, which, WD Gann was a godfather of, losing the 45 is a bearish trend. Okay, so this goes all the way back to the pandemic low. Okay, all the way back to the pandemic low. If you lose this is a big bearish trend. Obviously, you've been bearish. You are down, whatever the Nasdaq's down now, 28%, 33%. I don't remember right now, but this is, this is a key thing, and you can see you wick below it and got this rally up. But, again, I want to see how that people handle and digest Powell's news, because right now you got a double top, and if this thing drops you got support here at 10,772 on a primary fib, the 1 fib. You lose the 1 fib in primary fib trading, Fisher method. This is a reversal, okay? You come past the 1 fib, you're a reversal. Your bias will be go to the 1618 at 10,274. Okay, that's your bias. And as you guys know, you have like the 1 spot 128, you have the 1414, 1272. You have all these other fibs in here. Those are secondary fibs. Primary fibs are fibs you get to with a single calculation, okay? You get there with a single calculation. Secondary fibs take an additional calculation. So I focus on the primary fibs for the strongest levels of support and resistance, but you will see me use the other fibs as well. So watching the NASDAQ, because it was a very weak performer, and if you go to the NASDAQ on the 4-hour, which is where you really need to go to see what happened here, you have your double top. You see that? Went sideways, fell apart, and now you have a larger double top, all right? The whole market is shapes. Larger double top has formed off of this smaller double top structure, okay? Pattern trading, guys. That's why we are pattern traders, because the market moves in patterns. It repeats these patterns over and over, and you can get big trades if you know how to spot these patterns. MFI is bearish on the 4-hour. Volume momentum is weak and bearish as well. So let's go ahead and look at the last asset that I have on here, because we're over 20 minutes, and we are at gold. Now, looking at gold on the daily, 1673 is the number that you want to hold. And of course, we are below it. We are at 1635. As you guys know, I have a 1425 target for gold. And I think we're going to get there when the markets pull down. You're going to see gold pull down. Why? There you go, 1427 on the 1618. You're going to see the gold pull down with the markets, just like in the great financial crisis, where gold went down 34%. Going down to 1425 is a 31% down move. And the dollar, if the dollar gains strength, gold will lose. Eventually, gold will rally back up, but I'm buying it at the bottom. I like to buy things on the cheap, my friends. All right, guys, hope you enjoyed this video. Smash the like button, hit the subscribe button, and I will see you guys next video. Take care, everybody.